What's going on, traders? Welcome back to my YouTube channel. Hope you're doing well. And of course, I hope you're having a fantastic weekend. Today, we're going to be going over the weekly Forex outlook and reviews just to see what's happening in the markets, see if we can get a bias or an overview at least of what we could be looking for moving into next week. Just as a reminder, these are of my own opinions. So these are not facts. Anything can happen. And I do advise you to make sure that you do your own due diligence when looking at the markets and making a decision whether to enter a trade or not. I hope you do like this episode. And of course, if you do, make sure you hit that like button for us, subscribe if you're new to the channel, turn on notifications for future videos. And without further ado, let's get on with the show. So there's a lot looming in the dark in the markets right now. Uncertainty of war, potential sanctions, Federal Reserve officials banned from trading stocks, bonds, and cryptocurrencies, Russia's cyber attacks, US inflation up at 7.5%, its highest since 1982. Aussie dollars being affected in the crossfire, unfortunately, as it's seen as a higher risk asset, and gold is continuing to see attraction from investors, surpassing the highs at around 1900 an ounce territory. We shall continue to see what the year pans out, traders. But what we want to be doing now is just going over the markets to see what we could be looking for moving into next week. So the first pair we're going to look at now is on pound USD. We can see that the overall sentiment of the market is currently pushing bullish here. Now, we can obviously, scale out a bit. We can see that the overall trend of the market had been pushing bullish, and now we're starting to make these lower lows, lower highs. We can also argue that price is failing to break this very important level here around the 36.40 area. Now, this is very true. The problem is what we can't at this moment in time disregard is that the market is still holding the range, which simply means that there is a sentiment of bullish pressure in the market. Now, it's really up to you how you trade this. I'm going to be brutally honest with you. This is not something I advise you trade. There are much easier symbols to be trading. But at the moment, while price is bouncing from the highs and also bouncing from the lows here, it kind of just makes sense to stay out until we have a break of either the low or the high. The most two important areas that I'll be looking out for personally is 36.42 and 35.11. This is a huge range. And I know in the back of your minds, you might be thinking, well, this is over 100 pip range. Can I take advantage of trades within this range? You certainly can, but it involves a lot more work to be using scaling down techniques and identifying shifts in behavior and price action to then look for sells. It's up to you, traders. I would just say the best thing to do is wait for your 36.42 break or your 35.11 break and then look for those continuations. My idea is this: if price starts to break above 36.42, then I'll be looking for potential targets back to the highs. I don't see there's anything in the way that can stop this continuing back to the high. This is the initial move here that created the new low in the sequence. We now have a new higher low that hasn't made the new high yet because of the resistance to the left. So if we get that bullish break above, I think we take out one of the most important levels that made the low here, and we continue back to these highs. Now, of course, if price doesn't continue high and we stay within this range, then we only anticipate price come back down to 35.11. And if we get that break of 35.11, then there's nothing stopping us from free falling back down to the low around 33.72, where price created that low before then now creating the current structural high that's in place here in this sequence. So this is what I'll be looking for. Now, what I would personally do if I was you, traders, I'd make sure you're using confluences to identify US strength, pound weakness, or vice versa by going to pound JPY, pound Aussie dollar, looking at some of the US pairs like USD CAD, Aussie dollar USD, to see what is happening in the markets to validate where we can expect or anticipate the market to go. So that's my idea on pound USD. The next pair that we'll take a look at is on euro USD. Here you can see the overall sentiment of the market is very similar to pound USD. We can see that the dollar is showing signs of strength simply because we're creating areas in the market where price is failing to break above, and then we're creating that shift in behavior, which is illustrating some sort of bearish sentiment. Again, I'm not sold yet that we're selling. And I'm definitely not sold yet that we're buying. So I'm going to be waiting for some more confirmation here of price taking out some of these structural lows. What I advise you to do is when you mark in your structural low, always look slightly left to see if there's an area where price is reacted to. Here you can see this is the major structural low where price is reacted to. And now this is the area we want price to break. The reason for that is because this is where the buyers were sitting at the time that the price came into, and this is where the move moved off of. So now what we want to see is if the price is going to continue bearish, we'll use pound USD as a confluence, and we'd want to see 1285 broken to then anticipate a continuation back down to the lows. If the price doesn't break 1285, then we're going to want to see a shift in momentum in this market in line with this push to the upside, which is showing a deep pullback and potentially a higher low continuation. The best thing that we want to do here is identify an area in the market where price is going to fail to break because of multiple wick rejections. Again, look slightly to the left, find the area that makes most sense in the sequence. And as you can see here, this is where price reacted to. This is where the wick rejections are reacting to previously. And if we want to see this continue bullish, then we want to see a break above 1403 back to the highs here where price topped out around 1467. So my plan of action will be to see 1285 broken in anticipation of a continuation back down to the lows here, a break of 1403 in anticipation of a continuation to 1467. In line with pound USD, if we're going to have a continuation bullish as part of the structure, failing to break the lows here, then the 1403 break here on Euro USD would make sense. And if price fails to break the consolidation high and we see a continuation down, then the break of 1285 would make more sense here on Euro USD in line with pound USD, and then see a continuation back down to 1133. So the next pair that we'll take a look at is USD Swiss franc. Now, this pair is a hot mess at the moment, traders, and you've probably seen from pound USD and Euro USD, there are a lot more clearer pairs to be trading. We have an area in the market where prices failed to break here, and then we have many areas where prices failed to break. Here is resistance. We have more resistance, we have more support, and we just have too many levels here in the sequence that just will cause too much complications to be trading. The best thing to do in this scenario is put a big X on it, wait for it to clear up and start trending clearly, and then come back to it another time. So that's my ideas on USD Swiss franc. The next pair that we'll take a look at is pound JPY. Now you can see the similarities here with pound USD. We have a trend that's pushing to the upside. We have a deep pullback area in the market where prices continue to respect. We also have a resistance level here in the market where price is failing to break. And what we're anticipating is that if price continues bearish and we finally take out the lows here, then we can see this market potentially reversing just like on pound USD. But if we fail to break the lows here at 155.51, then what we're anticipating is a continuation to continue higher as part of this overall uptrend to the upside around 157.03. And then what we expect the market to do is come back to a structural high and tap it before even continuing bullish or reversing back to the downside. This is the level we'll be looking out for. So personally, with this structure, very similar to pound USD, the safest plan of action would be to see price taking out a major high at 157.03 or a major low at 155.51 to then see a continuation in either or direction. Once price breaks this structural low here, I think what you're going to have to do is scale down to or scale up to an hourly time frame to identify the major level that you expect price to come back to. Because with the noise from the 4H time frame, it's a little bit too noisy because of these well, I wouldn't call them intraday, I'll call them day levels, 24-hour levels, where the market has failed to break or break to the highs or break to the lows here. When we go back to the 4H time frame, you'll see this much more clearer now. When we're on this time frame, you can see lots of ebbs and flows of higher lows and lower highs. So you want to be able to identify the level you anticipate price to come back to before reacting. And I think the area that we can focus on here, based on the information, is going to be something like this in this sequence. The reason why it will be this area here in the sequence is because where price bottomed out, we made the new high, the higher low. Then we had the sequence here of price continuing to push higher before then we finally took out this level here to make the break and retest of the structure before continuing higher. Sometimes you have to consolidate these levels, traders, because it's very difficult to figure them out, especially when the market's making sequences of higher highs and higher lows. What I will say to you is not that important if the market is going to trend down, but it is important to identify at least a range you can take a trade within, to identify where you can take your sales from and to before you start getting reaction And this is something that I'll be looking at moving into next week if we get that break of 155.51. The next pair that we'll take a look at is gold. Now, we've already said we know where investors are going right now because of the uncertainty. We've come up to around 1900 an ounce. And if I'm brutally honest with you, I don't see this changing for quite some time. The levels that I'm going to be interested in to see this continue bullish, of course, as you know, I trade price action, is making sure price doesn't break below the higher low level here. We'll be looking for areas in the market where we can see a potential retest of previous structure, which is going to be this level here. And then the final area that I'm going to be looking for in this sequence is to see price breaking above the current high that it's failing to break around 1900, and then looking for the continuation breakouts or retest of these structures back to the upside. Some of you might be saying, well, are you not trying to cover too much here? Not really. This is called trading. You're never going to know where price is coming to. So what you have to do is make sure you plan, have your options open, and then you look for evidence and confirmation of price reacting off of these levels to then look for potential continuations in the direction you anticipate it to go. I do believe we're going to continue bullish on this. At what point next week, I do not know. But these are the three major levels that I'm going to be working with to look for either the deep pullback of the higher low, the retest level of the broken high, or the breakout retest of the current structural high at 1900 to see a new high put in after a period of time of holding and creating that resistance level. So that's my plans with gold. The next pair that we're taking a look at is USD CAD. Pretty simple here with USD CAD. We have, again, an area in the market where price is failing to break the highs, and we have an area where price is failing to break the lows. It's not rocket science here. We need true directional bias, and for that reason, we'll put this one on the back burner and we'll wait for some true directional bias. But either a break of 27.91 or 26.62 could start to give us an indication of where we think price is going. But at this moment in time, we have zero indication of anything. So let's just wait and see what happens. Next pair we'll take a look at is New Zealand dollar JPY. Now you'll start to see here strength in the yen. You'll also start to see here strength in New Zealand dollar. I'm not expecting these to be affected too much at the moment with the uncertainty of what's going on. But last week we did have a lot of mixed reviews, or I say this week we had a lot of mixed reviews or mixed biases. It was one stage early in the week we had strength with the yen, then we had strength with New Zealand dollar. And I think at the moment what we're going to be waiting for is just for some clarification to identify where we think this market is going. So one thing we have to identify first is why prices reacted. We have a previous structure level in the market that created the major low of the sequence here since January. So we'll mark this level in as being a very important level as part of this current downtrend, which is the overall downtrend here. The intraday downtrend at the moment has pushed bullish, so we can't ignore that. But with the structure having a deep pullback into the major key level here, we have to mark this territory out as being extremely important as well. So now that we have this level, we have our major structural high and our major structural low in the sequence. Then what we're looking for here is for one or two things. We're looking for price to break the highs to create the new high in the sequence as part of this new uptrend, which we'll call bullish behavior. If we fail to break these highs, then we'll be looking for the shift at 77.90 for a potential reversal and or continuation back to the downside. Depends how you want to see it. Or we simply just wait for price to break the structural lows here at 76.09 in anticipation of a continuation back to the major low point here of the structure. I think personally, if you're trading this, you're going to have to wait for a lot of evidence of where the market can go. I could talk about all the different scenarios in these structures here that you could be looking for. I just think it would be too complicated. I think for now, let's put this one on the back burner. But these are the scenarios I'll be looking for on New Zealand dollar JPY. Next pair we'll take a look at is New Zealand dollar USD. Now, there is more illustrating to us that the dollar is showing signs of weakness based on the structures that we've looked at on pound USD and euro USD, and now looking at New Zealand dollar USD. But as you probably see with euro USD and pound USD, we have more of a bearish sentiment. With New Zealand dollar USD, we have more of a bullish sentiment, which supports what we call New Zealand dollar strength. And this would illustrate the New Zealand dollar behavior that we've seen on New Zealand dollar JPY pushing to the upside. So with this, what we want to be saying to ourselves is, okay, at the moment, price is making a series of higher highs and higher lows. Where is the market reacting to the most? Well, if we look here slightly to the left, we have an area in the market where price created There's sentiment of a break, retest, continuation to the downside, deep pullback into this level with a reaction. Then we have price pulling back again. So we have our major high, and now we have our major low. In this sequence, the most two important levels is going to be the structural high and the structural low. And then now what we're looking for is a shift in behavior again. Currently, the behavior of the market is bullish. So we either want to see the market break the highs for the retest continuation above 63.30, or we want to see the shift bearish again back to the downside to take out the lows to look for a continuation bearish. This is exactly the same as New Zealand dollar JPY, nothing changes, or you simply just want to wait for the break of the major level here at 65.98 for a continuation bearish back down to the low that started this move from this point to this point. But this would be my plan with New Zealand dollar JPY. The next pair we'll take a look at is Aussie dollar USD. Again, you know, the Aussie dollar has been strong, as you can see. We have been making a series of higher highs and higher lows here. I personally would say let's again isolate our major structural high where the resistance is formed to create the new low. The area where price is respected after the deep pullback to create the high that is now being respected. And again, it's the same scenario. We have bullish behavior of this market. We're looking for the shift back to the upside. If we continue with higher lows and higher highs to break, this will be an indication of continuation of weakness, which will support Euro USD and Pound USD, New Zealand dollar USD, and now Aussie dollar USD to see this continue bullish, or we'll see the shift and then the lower highs, continuations bearish, back down to some of these structural lows. And if you want to be safe rather than sorry, again, you just want to see a break of these structural lows to take out the majors, to identify the dollar strength in anticipation of price coming back to a major level that created the current high in the markets. Again, these kind of patterns and sequences are very consistent if you understand them, not the easiest to trade. And sometimes it is better just to stay out, be safe rather than sorry, and wait for better trading opportunities. But this is how I would plan Aussie dollar USD. The next pair that we'll take a look at is USD JPY here. Now, again, as I said, we saw signs of dollar resistance, but we've also had yen strength. And I did mention that way back up, I think, on New Zealand dollar JPY, one of the other pairs that we just looked at. Currently, the overall sentiment in the market has been pushing bearish. We have a series of lower highs, lower lows, and potential lower highs here. The most important levels to me in the sequence based on the new lower high is the current structure level here where price made the new low, the low in the market where price made the new low, an area where I find the most resistance and current sentiment in the market pushing bearish. So for me, I'm only looking for sells, which means I'm supporting yen strength and dollar weakness in this sequence. For me personally, what I want to see next week is for price to break this structure low. Then I want to see price pushing back down to some of these levels here at these structural lows. Now, this is starting to make more sense to me. I'm seeing this sequence here because we're seeing USD strength weakness. We also see that with Euro USD, Pound USD, New Zealand dollar USD, and Aussie dollar USD. With inflation going up, we could be seeing investors going into safe haven pairs or currencies. We've seen it in gold already. We can start seeing it going into the yen. So it'll be very interesting. We also know with Aussie dollar is affected, unfortunately, in the crossfire with all the conflict that is happening. So you may see this one start reversing bearish, even though the dollar is weak. So just be careful of that. Or it could sustain and continue bullish. And if it does, it just adds more compliments to the idea of dollar weakness. We shall see, but this is my plan moving into next week on USD JPY. Some of you might be asking, what about a pullback level? This is the pullback level for the double top, continuation back down to the lows here. So this is not going to obviously be discounted, but I would much prefer just to see price take out 114.88 for a continuation lower. Next pair we'll take a look at is Euro JPY. We can see yen strength here. We can see the same structures really as Pound JPY, as USD JPY. We have an area where price has shifted bearish, which is the major low, the lower high in the sequence. We have an area in the market where price has taken out the previous higher low in the sequence. So this becomes the most important level after the break back in. So this becomes the indecision in this scenario. And then now what we're looking for is for a continuation bearish on the break of the structural level here, back down to an area of reaction, which is around here. The market is currently in a push phase after the lower high was formed. So we may have a pullback next week, especially with a gap up. We could have a retest of these previous structures before a continuation down. Nonetheless, regardless of however this plays out, I would only be looking for sells moving into next week on euro yen. The next pair that we'll take a look at is pound Aussie dollar. Now, with the structure of this market, again, being very rangy, if you look here to the left, prices failed to break these structures for a long period of time. We also have an area where price created the high, the low, and the lower high. So this is the next most important level in the sequence. And personally, until price action clears up and we have a break of the structural high or the structural low, I'm not really looking for anything at this moment in time. We do have a major level here in the market where prices held a mini range within the bigger range. So if you do get a break above this structure and a strong close, i.e. from a 4H perspective, you can anticipate after the bounce from this low here, price continuing bullish back to the highs at 90.44. I wouldn't say that it's bullish at this stage, but I will monitor pound USD and pound JPY to see if we have that pound strength at the start of the week. But nonetheless, we still need to work with our majors if you're not comfortable with working with the intraday levels, and that's around 90.52 and 88.40. Be wary of those as you continue to trade pound Aussie dollar into next week. The final pair that we take a look at is Aussie dollar JPY. Now, at the moment, this is probably one of the pairs that I would say stay away from. There is a lot of uncertainty with the Aussie dollar. There's also a lot of uncertainty with the yen at the moment. You will see that the trend of this market has literally depleted. We've had huge swings to the downside, huge swings to the upside. And personally, I would say stay away from it. With the uncertainty of investors going into putting their money in the yen, and obviously Aussie dollar being affected, we would want to see this continuing really strong bearish to the downside. But as we're not seeing this at this moment in time, it's probably a reason for us to stay out and trade something with a little bit more clearer evidence. What I'm gathering this week, traders, is that the dollar is showing signs of potential weakness. That is something to look out for. Pound is also showing signs of potential strength, but we do need some highs broken. Yen is probably, a currency we could rely on moving forward if we still continue to have this uncertainty. As long as it's not just a distraction, we don't want to see these strong ebbs and flows and swings in the market just for the sake of it. And I think gold we can expect to continue bullish. It is very, very unclear at the moment, traders. It's been a very funny month, funny 2 months to say the least. But I want to just say, keep your heads up. There is a long way to go for the rest of this year. And all I want to do is wish you a fantastic week moving forward into next week. Trade safe, trade smart. And as I always say, continue to trust the process. Have a good Sunday.